Ladies and gentlemen, I rarely declare this, but after looking at my portfolio and also looking at the market, I think it is time I will start selling. So let's just watch on and see what I implies. So this content is for education and entertainment only, not financial advice. Please subscribe to our channel and get an update. I'll probably do a live stream tonight where I'll probably do some firing and let's see how it goes. So after 5 years of investing in CPF and SRS, I think it's time that I do some selling, and I think there are lessons and results and next steps I will share with everybody in this period of investment. To be frank, I only start investing in S&P 500 with my CPF and SRS only when endowers was set up, because before that there were no other companies that allow you to invest into S&P 500 using a CPF. And I only invest, to be frank, largely in two big periods, right? Number one is that during 2020, during the COVID crash, if I recall correctly, I invested somewhere around June 2020 in a big way. And then the second part of it, I invest in a big way during the 2022 great inflation. And in these two crashes, I actually informed everybody. In 2020, I wrote many articles about it. And in 2022, I even fire live shots and live stream and video, all this to everybody. And today I can share with you the results. The results are pretty interesting, but more importantly, today is a point of pivot for myself. To start off, my total current portfolio size of my CPF and a bit of SRS is about 1.72 million between me and my wife. The total profits is about $725,000. Pretty substantial if you just consider this my CPF and a bit of SRS. And the total capital invested was close to $1 million. And if you analyze it over the period, it's about 14.7% internal rate of return, which is also commonly known by laymen as a compound annual growth rate. This 14.7 return is a serious outsized return compared to the usual S&P 500 return of 8 to 10%. And there's a reason why I'm able to achieve this kind of return. The returns look so strong because the entry point of my investment is largely in two periods, which is COVID crash, as I said, and also the inflation panic of 2022. And where other people were fearing and running away, I bought them, which is basically Warren Buffett's mantra of be fearful when other people are greedy and be greedy when other people are fearful. I clearly became very greedy in a period of time. And more importantly is I stayed disciplined and I held on to my portfolio and throughout this whole period. And the fact also that I have my CPF financial safety net in my special account and my MediSave account compounding to a phenomenal rate of return at 4% to a very big outsized number that provides me a financial safety net and an emotional confidence as well. So therefore, I dare to throw in big numbers like this, and the returns are pretty substantial. So the total return is about 15%. That's the annualized return, and this is close to double that of some people's S&P 500 return. And the driver, of course, is buy during crashes. Now, I'm not sure whether I can get this kind of outsized return again. It really depends on what crisis that come. Clearly, a lot of people say that no, I missed the 1 day drop of the big tariff dip. That is true. That is true. That 1 day huge drop of 20% and it recovers very well. I did fire some like 10多千 that kind of thing. It's or tens of thousands, which is actually nothing in the in normal investment sums that I take on. But it's okay, right? It's okay as you see that I can miss some big events. I'll still be okay in having outsized return. But I can also give you the computation if I've achieved a a path of investment using DCA, and let's see what the outcome would be. So if I use dollar cost averaging in with the same amount of investment, which is about $1 million, and I spread it across over these 5 years, right? the total portfolio size today would have been about $1.28 million, which is still a lot, which is still a lot. And that will be roughly about a 7% CAGR with a $84,000 profit. That's still okay, but it's probably less than half of what I've achieved in the previous case. So does dollar cost averaging works? Yes, it does. It's just not that kind of outsized return. So I now have a conclusive evidence that crisis buying, crash buying actually beat DCA, resoundingly. And I have another case study where I purchased a small sum of funds during a non-crisis period. Somewhere around 2018, I bought about $100,000 worth of Dimensional Fund, and that has accumulated up today with a profit of 167,000. So the profit is about 67,000, not bad, and the compound annual growth rate achieved is about 7.6%. Now, this is a non-crisis, non-crash buying, right? I put $100,000 in with, I think, SRS. So the total portfolio looks about this. I think it's decent. It's not bad. It's actually very good. Although it just doesn't look as great as the other portfolio, I consider this an okay investment. Not everybody can handle crisis purchase. Okay, crash buying requires a lot of guts of steel, and not everybody can do it. Now, take note. I did all this without reading, reading any financial analysis of companies, without plotting graphs, without looking at signals of breakout lines or candlesticks or whatever. I just did all this by looking at macroeconomic signals like what I teach everybody every day. So, just to share everybody, there are three investment approach. Number one is crisis lump sum buying that has yield very high returns. Dollar cost averaging is decent as well, roughly about 7%. Non-crisis lump sum buying also yield fairly good return at 7+ percent. So I think there are many paths that you can take. Pick one that suits your personality. I think that's where I would suggest. Now, back to my original topic. Why am I selling right now? Mr. Lu, I thought you would never sell, right? You count compound. Well, I don't sell, but I do a lot of rebalance. Okay. So right now I'm looking at a very decent profit of $725,000. And, I've held on all these whiles, have proven very resilient. And, and also the fact that my CPF financial safety net provides me a lot of confidence. But however, it's probably prudent that I take some profit out, okay, and rebalance to other assets. So I'm not taking out of my financial investment. I take it out of my profits to rebalance to other assets to continue investing. So how much to take out? Well, I take a rule of thumb, 1/3 of profits. Okay, 1/3 of profits. I already done one round previously already. I'm now doing a second round. So I'm not going to touch my CPF portfolio, but let's say I'm supposed to take out, let's say, just throwing a number, $100,000 of profit, I will take it out from the cash portfolio instead, because cash is more flexible. I'll leave this entire portfolio untouched, but the profit that I'm supposed to take out from the CPF SRS, I will take out from the cash portfolio, and then I'll redeploy into other thing. Now, what can you redeploy to? I'll share this generally, okay? I could look at other globally diversified index. I could put into bonds. I could put in bonds ETF. And by the way, so all the bonds ETF, since we're doing decently well also. And for some people, it's okay. It's okay that you use your money to take out and enjoy life, spend it and enjoy life, and so on. So I would be not very prescriptive to what you can do with your profits that you can take out. But taking out some profits to be rebalanced into other assets is what I would do. So the compounding and investment still continue in my case. Now, why do I do that? Is because if the market continue to rise, my 2/3 of profit will continue to compound as well. Okay. And if the market falls, I already lock in some profits and put into other assets that are less correlated with the S&P 500. So if it goes either way, I'm okay. Who taught me that, right? My fund manager taught me that. And also, the Singapore government taught me that. The Singapore government take out about half the profits, okay, to be used in the Singapore budget. So I'm taking out even lesser, take out one third of the profits, okay, to be redeployed into other use, or whatever it is. So I can invest in other assets. I can invest in private companies, into my businesses, or you know, if if needed, which I don't need, take some time to enjoy durian, expensive, Mao Samang durian, high-end durian or something, like whatever, right? My point is that this is a very flexible way of handling my profits. So, in a nutshell, I think my 5 years of investment journey using my CPF and my SRS gives me this answer. The right entry point matters. Okay, right entry point matters, and crisis opportunity creates extraordinary upside return, and the discipline of holding on to it, okay, throughout all time, not panic selling when there's crisis, really you extraordinary outsized profits. And also, the safety net from my CPF financial safety net using my special account and my MediSave account also gave me a lot of confidence to stay invested. So the final takeaway for everybody is this: how I would do it. Okay, uh, and if the market do tank in future, which I don't know when will that be, I can always throw back and go for the kill again. But if not, I would be equally happy. Well, I'll probably do a live stream tonight, firing some shots to show everybody. But I think this is how I would do it. Okay. Well, I'll be happy to hear your comments in the YouTube comments below. But this is what I think. I hope that everybody will learn something from it. Please remember, I'm not telling you to follow me. This is what I do. Okay, I'm not selling as profit taking. I'm selling to rebalance. So I think this is a key takeaway. Thank you, and I'll see you tonight. Bye bye.